Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF, ticker GRNY. This is our update for the week of September 3rd. First, let me start with some particulars. As of September 2nd, the price of the Granny Shots ETF was $23.10, net asset value of $23.09, and total assets of $2.4 billion. Now, there's some breaking news. Recently, Fundstrat Capital filed the preliminary prospectuses for two new ETFs. The first is the Granny Shots U.S. Small and Mid-Cap ETF, or SMID, and that's going to apply the Granny Shots research model for small and mid-cap equities. The second is Granny Shots U.S. Large Cap and Income ETF. This is going to seek current income while using the existing Granny Shots portfolio. You can follow developments by going to the website grannyshots.com and signing up for updates here, or you can scan the QR code from this actual video. Another announcement I want to make is that Raymond James has now made Granny Shots available on their platform. That means advisors can now purchase and sell these shares for their clients. Raymond James joins other advisor platforms, including Oppenheimer, Carson, BNY Mellon, Stifel, Ameritrade, RBC, Janney Montgomery, Fidelity, and Charles Schwab. Over the past week, Granny Shots is down 1.73% compared to a decline of 0.75% for the S&P 500, or underperformance of 100 basis points. Year-to-date, Granny Shots is up 15.68% compared to a 10% rise for the S&P, or outperformance of 564 basis points. And over the past 2 months, Granny Shots has underperformed by roughly 300 basis points. The reason for this is that there has been a miniature rotation within the S&P where growth stocks have been lagging and value stocks have been leading. But year-to-date, growth continues to outperform. In terms of macro, investors are bracing for a down September because of seasonality, but our contrarian view is that September will be an up month. Let me explain. When people look at seasonality, they typically get concerned about September and October, as that purple line shows you, that you typically have a down month. Part of this stems from the seasonality of the VIX. The VIX tends to rise in September and October, and we've already seen a recent rise in the VIX. But here's the reason I'm going to have a contrarian view. We think September is going to be an up month because the Fed's been on hold all year, and now they're going to make their first cut in September. That's only happened twice in the last 50 years, September 1998 and September 2024, and both were good months for equities. Here is the September for both 1998 and 2024, and as you can see, in both instances, the S&P was up 6% in September 1998 and 2% in September 2024. So this counters the negative seasonality. And as you can see here, the expected gain is 3% compared to September typically being down. And that's because the Fed is cutting in September. And this is true 2 of 2 times. So now let's look at Granny Shot stock performance. If we look at the top 5 contributors to Granny's relative performance this week, it's Palo Alto Networks, American Express, Google, Arista Networks, and Monster Beverage. The bottom 5 detractors or negative contributors were NVIDIA, Tesla, Lam Research, Robinhood Markets, and GE Vernova. In terms of style themes, seasonality was the best performing theme, followed by easing financial conditions, which makes sense given the Fed. And the third is millennials. That's it for now. Thanks for listening, and I'll speak to you soon.